Hey guys, welcome back. In today's video, we are talking about 99% retail ownership, no shorts covering, AMC improving, and many more in this video. First, we take a look at this. So we can see from this quick AI search, as of December 2024, retail investors own a significant portion of AMC, where whilst the exact figure fluctuates, it's the estimate they hold around 90% of AMC's outstanding shares. And so something that we've obviously always talked about is understanding the retail ownership. We know that, of course, is upwards in the 90s. Whilst on other places, we're seeing 50, 70, 60, all these fluctuation of numbers, we know that it's actually above 90. The reason why we don't see it at 90 is because they are including all the synthetic shares, which have obviously been bought up by the institutions, whilst the real shares of AMC should be that around 90%. And over here on this particular screenshot on Webull that you guys can see, MOAS incoming, proof of fraudulent practices by Webull, by institutions. Retail owns 99% of AMC as of today, according to Webull. Institutions sold 40% of the company since lasting 13 EVs. Someone get caught lying, last ditch effort. So on Webull, you can see the share ownership. Now for here, institution 0.73, insider 0.02, and the others at 99.24. Now normally, obviously, others refers to retail ownership, and so this is obviously what we are looking at. Now, whilst I don't believe that, of course, institutions is only 0.73%, it doesn't surprise me that retail owns such a large percent. Now, whether it's 99.24, we truly don't know what it is, because once again, there has been millions and billions of synthetic shares that's being created. We don't know whether right now the shares we're being, that is being bought up is real or is fake. Every so often, there may be some people, of course, selling their shares which are real, that are being bought up. That may go to institutions, that may go to retail, we don't know. But of course, there are a lot more synthetic shares that are being created and being bought up. And so it's important to understand is that at the end of the day, the retail still owns the large majority of AMC. And this is very important because this shows how much advantage we have. When the squeeze comes, remember, what they want to buy is, of course, the real shares. At the end of the day, they want to buy the synthetic shares as well, but they want the real shares. And we talked about this in the past because real shares obviously can be used to rehypothecate, and it can be used for other various methods as well. And so they obviously want to buy the real shares. But it's to understand that whether it's the real shares or the synthetic shares, if the larger majority of those are owned by retail, it means we get to choose the price at which we want to sell at. And so when the squeeze happens for AMC, the retail then gets the power to obviously set the price. Right now, the price of AMC, you guys can obviously see at $4. The reasoning for this is because it's being set by the market makers, it's being set by the institutions. And so right now, they have the power. But when the squeeze comes, obviously it will be a shift. It will become to the point where the retail will have power over the institutions. And that's what they are afraid of. Now, when you take a look at this, split adjusted reported SI, I see no shorts covering. Now, it's just obviously taking a look at, of course, the short interest. Now, the reason why I say this is very important and why we need to take a look at this is because of everything that's, of course, going on. And you can see I see no shorts covering. So a lot of people, obviously, they're worried about, when it became adjusted after all the splits, after all the dilution, are short sellers out? When you take a look at the different indications, firstly, the short interest clearly is showing that it's still high, meaning that, of course, there are still a large amount of short positions in. That's the first thing. The second thing is looking at in terms of all these methods that were originally used by hedge funds back in 2021 when the whole situation, was in the eyes of media and everywhere. The methods that they were using back then are the methods that they are still using now. So if they are out of these short positions, if they aren't affected by the squeeze of AMC, why are they still using the same techniques that they used back then to prevent the squeeze of AMC? And then the answer obviously becomes clear, because they are still trapped in this play. They are still at any point in danger of course, AMC squeezing, and that will obviously bankrupt them. And that's why we're seeing the same methods being used. And again, I want to show in terms of some of the factors we talked about. Firstly is understanding that they are, of course, still trapped in this play because no one is selling. Secondly is understanding about why retail owns a large amount. And you can see, and this is from this particular user who I've talked about in the past before, and you can see that he has over 3,400 shares of AMC with an average cost of 489, and again market value coming in at 14,000. Now he is just, you know, one particular individual investor. He's of course just one individual retail investor, and there are hundreds of thousands of other investors out there who obviously will have you know, same positions or an even bigger position than him. But it's the very fact that he didn't buy this position all at once. He gradually bought up into this because he was obviously updating, and we talked about this in our videos as well, and eventually it came to the point where it is right now at 3,400. And so it's important to understand is that whilst you may think that everyone is selling their shares because we're seeing the price drop to $4 and all these others, the truth is that retail are still buying. Remember, the reason why they're able to get this down, and is why we talked about, you know, why there are billions of synthetic shares, is because they, you know, overfill with supply. Because they know that there is a high demand. They know that retail investors will always buy into their AMC shares. And again, if they don't create the billions of synthetics, if they don't continuously creating supply, obviously on the normal you know, demand and supply, the price will obviously go up, and that's why they're continuously making these synthetics. But like we talked about in the past, this is something that will go back to bite them, because the more synthetics they make right now, the more synthetics they have to buy back in the future, and that's what's the stake at right now. And you can see AMC Theaters already beat Q4 of 2023, broke 2 billion for Q4 and remained 5 full days. And so this is where we are looking at. Now, the reason why I think this is very important is, firstly, you guys can see the releases is lower than it was in 2023, yet we still have a higher gross. And this shows that the average, of course, is increasing. That itself is a good thing. The average is a very important indication to let us understand in terms of going into next year, going into the future, how well are we going to do? We talked about, you know, quality over quantity. We talked about, and in terms of why quantity is important. So if we are able to get a higher quality and go into the future, we're also going to get a higher quantity, then you can see how when you put them together, how that obviously going to help AMC. And we know that AMC earlier in the year was obviously affected with the strikes. And so now that we don't have that affecting us anymore, we're obviously projected for a very, very good future. Another thing to understand is, how will AMC have an increased cash burn if interest expenses are decreasing dramatically? Reason AMC was burning through cash was because of interest expense in the first place. Now those expenses are diminishing. What's your answer? So something that we have to understand is, this is something that Adam Aaron has pointed out. Now, we talked about the debt restructuring, we talked about paying off the debt, and now that's very simple. That itself will, of course, cut off the interest payment because we're paying off debts, therefore there are less interest. Another thing is to also see, and it's something that is obviously a macroeconomics as well, is obviously the interest rate. Now, we have recently seen another 25 basis point cut, and going into the future, we're likely to be seeing more 25 basis point cuts. And we talked about this. Every 25 basis point cut means that the AMC's interest payment will get decreased by $5 million. So you can see how that's obviously going to help AMC, and how going into the long run, that's going to be even better. And go on top of that, like again, we talked about with the box office, the bigger the box office, the higher the revenue will be for AMC. Therefore, the more money they'll make. So we're going to an era, we're going to a time where AMC's revenue will increase, and because of that, their profits will increase. And we're going to a time where AMC's cost, their expenses, are going to decrease. Now, it doesn't take a genius to realize that when we're going into the next year, when we're going into a state of revenue increasing, when we're going into expenses decreasing, well, then the answer is very simple. The profit will be increasing. And so a lot of people are saying that AMC is burning through cash, etc., etc. But when you combine everything, when you understand everything that's going on, you know, we clearly know that that is not the case. Furthermore, you can also see this. Holy shit, over 250 million FTDs listed as assets by Doug Large and the Virtue Boys. Another 150 in FTDs reported as liabilities. And this is obviously going to look at Virtue. Now, something that we have to talk about Virtue is that they are not in a good position. We talked about the loans. we talked about the unhealthy financials, and we talked about in terms of the liquidity problems that's all around, but also something that they're obviously facing as well. And so these are that things that we talked about are the exact factors that will lead to the MOAS of AMC. And another thing to understand is that going into next year, you're going to be seeing the financials of AMC improving. You're going to be seeing the financials of AMC short sellers decreasing. And so, again, doesn't take a genius to realize that we are obviously going to be the short. Anyway, guys, thanks for watching this video. I'll catch you guys next time.